All right, welcome to another deep dive.
Yeah.
You share the sources and we do all the work.
We highlight the interesting bits.
Yeah, like your own personal research team, kinda.
Exactly.
And today we're looking at the Nippon Macros chart book from March 2025.
Oh,
The one that you sent.
sounds good.
It's got a bunch of data about India mostly, but with some global stuff too.
All right, cool. So what are we focusing on with this one? What's our mission for today's deep dive?
So basically we want to pull out the biggest trends, the things that are really moving the needle,
Right.
so that you can get a feel for how things are looking economically, as of March 2025.
Okay, makes sense.
We also want to point out any surprises, anything unexpected, things that might not be on everyone's radar.
Gotcha, yeah.
There's a lot of information in here. So
Yeah.
from manufacturing, markets, global stuff, you name it.
Sounds like a lot to cover.
It is.
Should we start with India's manufacturing sector? I know that's a big focus of the report.
Yeah, let's do that.
Okay, so the first thing that jumps out is the Manufacturing Purchasing Managers Index, or PMI.
Okay.
It's a good way to see how active businesses are,
Right.
And in March of 2025, it jumped up to 58.1.
Wow, that's pretty high, right?
Yeah, it's a big jump from 56.3 in February.
That is a big jump. So what's behind that?
The report says new orders.
Uh-huh.
New orders are way up.
So like new business coming in?
Yeah, exactly.
Got it.
They say the new orders index hit an 8-month high.
Interesting.
It seems like there's a lot of customer interest, and the overall demand was just really strong.
Wow, that's going to be good news for those businesses.
Yeah, definitely.
Okay, so manufacturing's doing great. What about the services sector?
Services are still doing well, don't get me wrong, but the PMI did dip a little bit,
Oh, how much?
down to 58.5 in March from 59 in February.
Still above 50 though, right?
Oh, yeah, definitely.
Okay.
It just means that services are growing a little slower than they were. The report says this is probably because demand softened a bit and there weren't as many new jobs being created in services.
Okay, so manufacturing's speeding up and services are slowing down.
Yeah, kind of.
It's interesting how they're moving in opposite directions.
Yeah, it's definitely something to keep an eye on.
Absolutely. Now, what about actual production? What's the IIP, the Index of Industrial Production, saying?
So the IIP was up 5% year over year in January of 25.
Okay.
That's better than December of 24, when it was only up 3.5%.
Good to see it going up, but 5% isn't a huge jump.
Right, but when we break it down, it looks pretty good.
Okay, how so?
Manufacturing itself was up 5.5%, mining was up 4.4%, and electricity generation went up 2.4%.
Ah, so it's pretty broad-based growth then.
Yeah, exactly. It's not just one sector carrying the whole thing.
Okay, now let's talk about something that everyone cares about. Inflation.
Yeah, of course.
What's the report say about prices in India?
Okay, so it's a little complicated. So CPI inflation, the prices that consumers pay,
Right.
that actually went down to a 7-month low.
What was it?
It was 3.61% year over year in February,
Oh.
down from 4.26% in January.
All right, so that's good news for consumers, right?
Yeah, definitely.
Why did it go down, though?
The biggest reason was food prices. Food prices went down quite a bit.
That makes sense.
Yeah. Consumer food price inflation was down from almost 6% in January
Wow.
to 3.75% in February.
That's a big drop.
Yeah, it is.
Okay, but what about WPI inflation?
Yeah. Wholesale prices are a different story.
Uh-oh.
They actually went up in February.
Really?
Yeah, to an 8-month high of 2.38%.
So what does that mean for businesses?
Well, it could be a problem if businesses can't, pass those higher costs on to consumers.
Right.
The profits could be squeezed.
That makes sense. Okay, so consumers are getting a break for now, but it might not last.
Yeah, that's the thing with inflation. It can be hard to predict.
Absolutely. Okay, enough about inflation.
Okay.
Let's zoom out to the big picture. What about overall GDP growth?
So the Indian economy grew by 6.2% year over year in the third quarter of fiscal year 2025,
Okay.
which sounds good on its own,
Yeah.
but it's actually slower than the previous quarter.
Oh,
Yeah, the second quarter saw a 9.5% growth.
whoa, that's a big difference.
Yeah, it is, and the report says it's mainly because of the manufacturing sector.
Really? I thought we just talked about how manufacturing was doing so well.
Yeah, it is doing well, but it's not growing as fast as it was.
I see.
Manufacturing growth slowed down to 3.5% in that third quarter,
Okay.
compared to 14% in the same quarter of the previous year.
Wow, so it's like it's hitting a bit of a speed bump.
Yeah, I think that's a good way to put it.
Okay, let's move on to trade. What's happening with India's imports and exports?
Okay, so the good news is that the merchandise trade deficit got smaller.
That's good, right? Less of a gap between what we buy and what we sell.
Exactly.
Okay, so what was it?
It was down to $14.05 billion in February of 25,
All right.
which is a big improvement from 19.51 billion in February of 24.
So how did that happen?
Both exports and imports went down, actually.
Really?
Yeah, but imports went down more.
Okay, that makes sense.
Exports fell by 10.87% to $36.91 billion.
All right.
And imports dropped by 16.35% to $50.96 billion.
So are people in India just buying less stuff?
That's one way to look at it.
Okay.
Could also mean that domestic demand has weakened a bit, you know?
Right. Less demand, less need to import things.
Exactly.
Okay, what about the current account balance? Did that improve too?
Well, so the current account deficit, the CAD,
Right.
that actually increased a little bit to $11.5 billion.
Not great.
Yeah, but it's only 1.1% of GDP.
Okay.
Same as the third quarter of the previous year.
Right.
And it's actually down from 16.7 billion in the second quarter.
Okay, so it's moving in the right direction at least.
Yeah, I think so.
All right. Let's move on to some other economic indicators. What about GST collections?
GST revenue is really strong. In March 2025, it grew by almost 10% year over year.
Wow.
To 1.96 lakh crore rupees.
So things are moving and shaking in the Indian economy.
That's one way to put it.
Yeah. What about foreign exchange reserves? Are those looking healthy?
Yeah, they are. They went up to $665.40 billion as of March 28th.
Okay.
That's up from $638.70 billion at the end of February.
This is a good cushion in case of, global economic shocks.
Exactly. Those reserves act like a safety net.
Yeah. Okay, so we've covered the basics of the Indian economy. What about the markets, the stock market?
Okay, so the Indian stock market actually had a really good March in 2025.
Oh, yeah.
Yeah, the report says there was a lot of buying across most sectors.
That's interesting. Why was everyone so optimistic?
Well, a couple of reasons.
Yeah, okay.
First, there was good news from both the U.S. and China. Their retail sales numbers were better than expected.
Ah, so that boosted confidence globally.
Exactly, and India benefited from that.
Right.
Second, the U.S. Federal Reserve, the Fed,
Yeah.
they kept interest rates the same in March.
Okay.
But they also hinted that they might cut rates later in the year. Yeah, they said there was some uncertainty in the economy.
That makes sense.
And that possibility of future rate cuts made investors happy. It usually does.
Yeah, okay, so global factors were playing a role. What about anything specific to India?
Yeah, there were also a lot of foreign investors putting money into the Indian market.
Okay.
And the rupee was getting stronger.
So everything was pointing in the right direction.
Yeah, pretty much. Although there was one thing holding the market back a little bit.
What was that?
The trade war. People were worried about a global trade war.
Oh, yeah, I remember that. Things were getting pretty heated between the U.S. and some other countries.
Exactly. The U.S. was putting tariffs on a lot of imports.
Right, and that made people nervous.
Yeah, it made it hard to be completely optimistic about the future.
I see. Okay, so which sectors were the winners in this market rally?
The energy sector did the best.
Really?
Yeah, there was strong demand, new capacity being added, and lots of infrastructure projects going on.
That makes sense.
Plus, it was the start of summer, so power generation companies were probably in high demand.
Yeah, makes sense.
Metals was also a big winner.
Okay.
People were optimistic about China's economy, and the weaker U.S. dollar helped too.
Right. Plus all that extra defense spending in Europe, right?
Exactly. That was good for metals companies too.
Okay, so energy and metals were the stars. Any big losers?
Yeah, actually, IT was the worst performing sector in March.
Interesting. I wonder why.
The report doesn't really say, but it seems like something was holding them back.
Yeah, well, everything can't go up at the same time.
True.
Okay, now let's talk about valuations. How expensive are stocks in different parts of the market?
So mid-cap stocks were looking pretty expensive in March,
Okay.
compared to both large-cap and small-cap.
Interesting. So what does that mean?
Well, large-cap valuations were actually below their 3-year average.
Okay.
So maybe they were undervalued, who knows?
Right.
But mid-cap and small-cap, they were both above their averages.
So people were paying a premium for those.
Yeah, it seems like investors were really bullish on companies that focus on the Indian market.
Yeah.
The domestic growth story.
Right. But that could be risky if those companies don't grow as fast as people expect.
Yeah, that's always a risk. You got to be careful.
Okay, enough about stocks. Let's talk bonds. What was happening with bond yields?
So bond yields were generally falling in March.
Okay, why was that?
Well, the Reserve Bank of India, the RBI,
Yeah.
they were doing these open market operations where they were buying government bonds.
Okay.
And that injected liquidity into the banking system, which made people feel more positive about bonds.
Right. So the central bank was influencing things directly.
Exactly.
Or were there any other factors?
Yeah, inflation was lower than expected, remember?
Oh, right. Yeah.
That also helped push yields down. And the Fed signaling potential rate cuts helped, too.
Okay.
Plus, people weren't as worried about the rupee falling in value.
So a more stable rupee makes Indian bonds more attractive,
Yeah,
right?
exactly. It's all connected.
I see. Okay, what about different types of bonds? Government bonds versus corporate bonds.
Okay, so yields on government bonds, also called gilt securities,
Okay.
they fell by 12 to 23 basis points, depending on maturity.
Right.
And corporate bond yields also went down by 3 to 17 basis points.
Okay, so both types of bonds were getting less attractive.
Well, their yields were going down, which means their prices were going up.
Right, right. So that's actually good for people who already own those bonds.
Exactly. They made money.
Okay, so what else was interesting about bonds in March?
Oh, yeah. So the spread between corporate bond yields and government bond yields, that actually widened.
What does that mean?
It means that investors were demanding a bigger premium to hold corporate bonds, because they're riskier than government bonds.
Right, right. So more risk, more reward.
Yeah, something like that.
Okay, last question on bonds. What was the banking liquidity situation?
Oh, yeah. The report just said that it had eased recently, which is good news for banks.
Okay, that's good. More money to lend out, right?
Yeah, basically.
Let's move on to fund flows. What were foreign investors doing in March?
So FIIs, foreign institutional investors, they were actually selling Indian stocks for the third month in a row.
That's surprising. Why were they pulling out if the market was doing so well?
It's hard to say for sure, but maybe they were just taking some profits.
Okay.
Or maybe they were worried about the trade war or something else.
Yeah, hard to know.
But mutual funds, domestic mutual funds,
Yeah.
they were still buying stocks in March.
Oh, really?
Yeah, it was their 49th straight month of being net buyers.
Wow. They must be pretty bullish on India.
Yeah, they've been a big support for the market for a long time.
Okay, so what about the debt market? What were FIIs and mutual funds doing there?
It was the opposite, actually.
Yeah, okay.
FIIs were buying bonds in March, and mutual funds were selling.
Interesting. So they were kind of switching places.
Yeah, it seems like it.
Okay, now what about those SIPs, those systematic investment plans?
Those were still going strong in February. Monthly contributions were almost 26,000 crore rupees.
So regular people are still putting money into the market?
Yeah, definitely. But the total amount of money in SIPs did go down a little bit.
Okay, interesting.
Yeah, it'll be interesting to see if that trend continues. All right, enough about India. Let's go global.
Sounds good.
What was happening with inflation in the big developed economies, the U.S. and Europe?
Well, inflation was actually slowing down in both places.
Okay, that's good news, right?
Yeah, generally. What was it in the U.S.? U.S. consumer price inflation was 2.8% in February,
All right.
down from 3% in January.
Okay.
And core inflation, which doesn't include food and energy, that was down too.
I see.
And in the Eurozone, their inflation rate was 2.3% in February, down from 2.5% in January.
So a pretty consistent trend then.
Yeah, it seems like inflation is under control for now, at least.
Let's hope it stays that way.
Yeah, me too.
Okay, what about manufacturing? Was that slowing down too?
It was in the U.S.
Their manufacturing PMI fell to 50.2 in March, down from 52.7 in February.
Not great.
Yeah, but China's manufacturing PMI actually went up.
Oh, really?
And to 51.2.
Interesting.
Yeah, it beat expectations, and it suggests that their manufacturing sector is picking up.
Okay, so different stories in different parts of the world.
That's the global economy for you.
Yeah, so what about stock markets around the world? Were they doing well in March?
Actually, most of them went down.
Oh, really?
Yeah, but India was one of the few that went up.
Interesting.
Yeah, it was the best performing emerging market.
Okay.
Taiwan was the worst, and the U.S. and Japan were the worst performing developed markets.
I wonder why everyone was so negative.
Well, in the U.S., it seems like people were worried about the trade war.
Right, yeah.
And there were also concerns about the tech sector, which was weak in March.
Okay.
The report doesn't really say why Japan's market did so poorly, but it was probably a combination of factors.
Yeah, probably.
Global worries and maybe some domestic issues, too.
Right, so what about interest rates? What was the Fed doing?
They kept rates the same in March, but they hinted at cuts later in the year.
Right, we talked about that.
Yeah, and the U.S. 10-year Treasury yield, that went up a little bit.
Okay.
So it seems like the market was expecting rates to stay the same for now.
Okay, and what about returns in other countries, on government bonds?
So this is interesting. Most countries were actually offering positive real yields on their 10-year government bonds.
Positive real yields, what does that mean?
It means that the returns on those bonds were higher than inflation.
Oh, so investors were making money even after accounting for inflation.
Exactly.
That's pretty good.
Yeah, especially since Japan's real yields were negative.
Okay, so most of the world was doing okay in terms of bond returns, just not Japan.
Yeah, that's about right.
Okay, let's move on to commodities. What was happening with oil prices?
So Brent crude oil prices actually went up in March.
Okay,
A few things caused that.
like what?
Well, the U.S. was talking about putting tariffs on Venezuelan oil.
Right.
And they also put new sanctions on Iran.
Okay.
But OPEC plus, the group of oil-producing countries,
Yeah.
they were signaling that they might cut production.
Okay, so less supply.
Exactly.
That would definitely push prices up.
Plus, the U.S. reported a big drop in their crude oil inventories, so that added to the pressure.
Okay, so lots of things pushing oil prices higher. Were there any factors pushing them down?
Yeah, there were some concerns about the trade war.
Right.
People were worried that it would hurt the global economy and therefore reduce demand for oil.
That makes sense.
And there were also some general worries about global growth, and some people thought there might be too much oil in the market already.
Okay, so a bit of a tug of war then.
Yeah, exactly.
Okay, what about gold?
Gold prices went up too.
Oh, really?
Yeah, it seems like investors were nervous about the trade war and all the geopolitical tensions.
Right.
So they were buying gold as a safe haven,
Yeah, that's classic gold. Buy it when you're scared. Okay, and what about the rupee? Was it going up or down?
It was going up against the dollar,
Okay.
partly because the Indian stock market was doing so well,
Okay.
and partly because foreign investors were buying rupees,
Right.
and also because the dollar was weak in general.
Makes sense. So silver did well too, right?
Yeah, silver went up a lot in March.
Okay, so what's the bottom line for all the different asset classes, stocks, bonds, commodities?
Well, in March 2025, silver and gold did the best,
Okay.
and global stocks and crude oil did the worst.
Interesting.
Yeah, it was definitely a volatile month.
All right, let's wrap up with some of the key events that happened in March, both in India and around the world.
Sounds good.
Okay, so what was happening in India?
So the index of 8 core industries, that grew more slowly in February 2025 compared to the previous year.
Okay.
But some sectors like cement and fertilizers did really well.
Okay.
India's fiscal deficit was a little bit lower than expected.
Okay.
Foreign direct investment, or FDI, that fell in the last quarter of 2024. But it was still up for the year as a whole.
Right.
And e-way bill generation, which is a way to measure domestic trade activity,
Yeah.
that was slowing down a little bit too.
Interesting.
Yeah, but housing loans were still growing.
Okay.
And most of the money coming into India was from the US, UK, Singapore, Canada, and Australia.
Interesting.
Yeah, a lot of remittances of those countries.
Okay. What about globally? What was going on?
So all the major central banks, the Fed, the Bank of England, the People's Bank of China, the Bank of Japan,
Yeah.
they all kept their interest rates the same in March.
Okay.
No big surprises there.
Yeah.
And industrial production went up in both the US and China in February.
Okay. So
Right.
it's a mixed bag of news then.
Yeah, pretty much.
All right. So looking ahead to April, what should we be paying attention to?
So in India, the big thing is the RBI's interest rate decision.
Okay.
We'll also get industrial production data and CPI inflation for February and March,
Right.
and trade balance figures and WPI inflation.
Okay. Lots to keep track of.
Yeah, and globally, we'll be watching CPI data from China and the U.S.,
Okay.
Germany's HICP, that's their inflation rate,
Yeah.
and unemployment and CPI in the UK.
Okay.
And finally, the ECB, the European Central Bank, they'll be making a decision on interest rates too.
Wow. April's going to be a busy month.
Yeah, it seems like it.
Okay. Well, I think we've covered just about everything.
Yeah, I think so.
So as we wrap up this deep dive into the Nippon Macros chart book for March 2025,
Yeah.
what are your biggest takeaways? What really stood out to you?
For me, the biggest thing was the difference between manufacturing and services in India.
All right.
Manufacturing is doing really well, but services are slowing down.
Yeah, we talked about that.
It makes you wonder what's going to happen next.
Absolutely.
The other thing that was interesting was how well the Indian stock market did,
Yeah.
especially compared to the rest of the world.
It seems like there's something special about India right now.
Yeah, maybe.
Okay, well, thanks for all your insights.
No problem.
And to you, our listener, thanks for joining us for this deep dive.
Yeah, thanks for listening.
We hope this has given you a good understanding of the economic and market trends as of March 2025.
And hopefully it saves you some time.
Absolutely. No need to read that whole report yourself.
Yeah, we did the hard work for you.
We did. Now it's your turn to think about what all this means, you know?
Yeah.
What questions do you have?
And what do you watch out for in the coming months?
Yeah, like what's going to happen with the trade war, for example.
That's a big one.
It is. And what about the Fed? Are they really going to cut rates?
And if they do, how will that affect India?
Yeah, that's a great question.
And one more thing to think about.
Yeah.
How will all this global uncertainty affect India's economic growth in the second half of 2025?
That's a good one. Lots to think about.
Definitely.
All right. Well, on that note, thanks again for listening.
Yeah, see you next time.
Till next time.